Welcome back to the program. In a previous episode of First Issues, we started a series on the basics of bonds for the benefit of those who may be interested in investing in them with senior trader at the Rand Merchant Bank, Bhagang Mabisi. It is on that episode that we learned bonds to be investment securities, where an investor lends money to a company or a government for a set period of time in exchange for regular interest payments called coupons. Once the bond reaches maturity, the bond issuer returns the investor's money. Bhagang said that there are two types of bonds, corporate bonds and government bonds, which are issued by the government of Botswana. She returns tonight to have a very short conversation on the performance of the bonds market. Her discussion will start with how the bonds performed pre-pandemic, ending with where the market might be in the next 5 years. Bhagang, thank you so much for affording us your time. We're back here again to further discuss bonds. And today specifically, we'll be talking about the performance of the bond market. So if you would start off really by just painting a picture for us on how the bond market was before today.
It would not be fair if I don't take you on a journey of what happened prior to 2020 and, after 2020, as well as what's recently happening in the bond market. So prior to 2020, this is really how our bond market looked. The central bank or the government of Botswana was issuing quarterly auctions, small amounts, not as sizable as they are right now. So it was issuing quarterly auctions, and we had what we call the 15 billion Pula note program, which ran before 2020. Basically, what an auction means is that, the central bank would announce, we are having or we'll be auctioning out XYZ bonds, let's say the 2023 bond, the 2025, 2031. They will, list out what maturity profiles they're auctioning out. They'll also list what treasury bills they're auctioning out. So what then would happen is that they would come to the market, or they would come to the primary dealers who are mandated to deal with them, to actually buy these bonds and sell them to the wider market. So that's why most of the time we as primary dealers are also enlisted to market these bonds to the public, to Motswana ko gae, to the companies that we have in Botswana, and say, these are the government securities that are on offer, and this is what, the returns that they would give you, these are the coupons they would give you, and these are the risk or maturity profiles that are available for you. So at the beginning of 2020, this lapsed, and then we gave birth to a new note program, which was doubled, which is a 30 billion Pula note program. Yeah, that's a lot. A 30 billion Pula note program. It was approved in Parliament in July 2020. So now you must understand that in 2020, there were a myriad of factors around, It was the wake of the pandemic. And at the time, there was need for funding because of the Economic Relief and Transformation Program, which was estimated to be around 14.5 billion Pula at the time. And also there was, a projected deficit for the year. So with all these factors, or taking all these factors into account, there was a need for funding. A growing need for funding, with COVID expenditure increasing everything else. So with the new 30 billion Pula note program coming in and the government's need for funding increasing, we then had, or the government had, to increase the frequency of auctions. So that meant from quarterly to now monthly auctions. This gave birth to a 400 basis increase in the market of yields, which was an anomaly, because remember, in an economic environment like that, where we were having, interest rates going down, you would then expect, your yields to also go down and the price of bonds to appreciate. But we did not see that. We saw the opposite. Because the government was in need of funding, yields started edging higher. So they were willing to pay higher and higher and higher and higher until, the anomaly that we saw in 2020 throughout to 2021. So post the pandemic, which is now, yields have sort of stabilized. We haven't seen a movement in yields, a significant movement in yields for the past 4 or 5 auctions as the yields have remained unchanged, particularly because the government feels that they might have reached comparable rates with their South African counterparts. Also considering our credit rating is one that is very high, amongst the highest in Africa.
So then, with any other conversation pertaining to the economy and markets, we have to talk about projections. So where are you seeing the bond market in the next maybe 5 years and beyond?
I think in the next 5 years, we're obviously going to see our market develop, or our local bond market develop like it has been over the years. And we have seen a lot of international interest, ever since the hike of the yields. But with time, because we are in a hiking cycle globally, we are likely to see this hiking, or this interest rate hiking, trickle in, or slowly trickle in to the bonds. So we might see, higher yields, but not significantly higher as they were, or the aggression or the pressure that they rose in the time of 2020 to 2021, particularly because, the government might have reached comparable rates with their counterparts, and there's no, need for funding as of yet. I think everything is abreast.
Join us again next time when Bakang returns on the program to share details on how to invest in bonds as a retail client.
This program was brought to you in association with First National Bank of Botswana.